Welcome to the Daily Insights That Matter. India's industrial growth measured by the IIP declined to 4.3% in December 2022. The Index for Industrial Production is the index that tracks manufacturing activity in different sectors of an economy. Now, the core sector output, which we discussed last week, contributed to about 40% of the IIP. Now, India's industrial output grew by 4.3% year on year in the month of December. Electricity sector recorded the highest production in December with a growth of 10.4%, followed by mining at 9.8% and manufacturing at 2.6%. Post its rebound to a 5-month high of 7.1% in November 2022, the IIP declined to 4.3% in December 2022 due to a sharp moderation in manufacturing as a broad-based slowdown was visible in the segment. While the IIP fell to 4.3% in December from 7.3% in November, this was on the back of an unfavorable base effect and due to the slowdown in the export-oriented sectors. When we look at the month-on-month momentum, the IIP grew by 5.3%. Moreover, a healthy growth over the pre-pandemic levels of December 2019 was also witnessed in all the three sectors. Now, this shows that the industry activity continued its momentum. However, going forward, it will be critical for the current growth momentum in the industrial sector to be maintained due to the macroeconomic headwinds. Weakening external demand will remain a drag for the industrial sector as well. Hence, maintaining domestic demand becomes even more crucial in these times. Now, it is no secret that the automotive industry is still reeling under some pain due to the semiconductor chip shortage, which had arisen due to the COVID-led knockdowns. Now, the effects are still felt even with the automakers struggling to ramp up their production to full capacity despite a large order book. Semiconductors are absolutely essential components in producing the majority of appliances, cars, and electronics. 20% of the semiconductor demand comes from the auto industry alone. Now, during the third quarter results, major automakers highlighted that the supply shortage of electric components had marginally increased in comparison to the previous quarters. Additionally, companies were unable to utilize their existing capacity due to the virtue of supply disruptions. Automakers like Maruti Suzuki, Mahindra & Mahindra, and Tata have pending orders that still have to be fulfilled. Even as companies are adding capacity and ramping up massively for the EV production, they are unable to take full advantage of it because of the disruptions in the global supply chain for semiconductors. Now, the shortage of semiconductor chips has affected not only the automotive industry, but many other sectors as well. Limited visibility on the availability of electronic components is also a challenge in planning production. With these hindrances, India plans to become a hub in the semiconductor manufacturing space. India announced the PLI scheme to boost manufacturing in semiconductor space. Recently, Vedanta and Taiwanese manufacturer Foxconn invested $19.5 billion to build a semiconductor plant in Gujarat. Now, the shortages in semiconductor and electronic component space is limiting production volumes currently. India has been investing in the domestic semiconductor manufacturing space to address its own semiconductor consumption and to gain access to one of the world's most valuable technologies. With the drive to create and manufacture semiconductors locally with the PLI scheme, the long-term growth for this industry seems to be bright. So what does all of this news mean for you? Following November, the industrial activity in December has maintained its momentum. Going forward, the industrial activity will get support from sustained urban demand, improved rural demand, and the government's enhanced thrust on capital expenditure. However, we do believe that the industrial sector will feel the pinch of a global slowdown. This will therefore have an indirect neutral impact on you. The current shortage is expected to moderate in the near term as the supply chain constraints ease out. The long-term prospects of the sector seem promising, and hence the current shortage will have an indirect neutral impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.